All right. So tonight we're going to talk a little about insurance. We're going to start out with like auto, homeowners kind of stuff. Then we're going to move into health insurance, which I'd love to spend more time on that, but there's not much in the way of content because it's a mess and it's not necessarily something I can offer you some advice in terms of making sure you have it, perhaps through your employer. Maybe that might affect your decision, but other than that, there's not a great program. Anyway, a little too much negativity to start out with. What we're going to talk about also, it'll be a separate lecture or separate material, but I'm going to have some prep for the midterm exam, like I promised before you have your exam, because we cover a lot of different material. Try and have a review to kind of link it together, and so you'll wanna watch that before you take the exam. Exam's not that big a deal. Shouldn't get you too stressed out. Multiple choice. Anyway, done on Blackboard. You don't need a proctor. It's all good. So, jumping right in. So, auto and homeowners insurance. This is one of these things that, especially on the auto side, and for the most part on the homeowner side, you generally have to have it. If you want to drive, you have to have some sort of liability insurance. Liability insurance means it's going to protect the person that you're going to hit. Now, the state obviously, well, not obviously, but they don't care whether you insure your own vehicle. That's your business. But just like a home, if you've got a loan on it, the lender wants to make sure that there's insurance. Now, even on the liability thing, if you want to, and you've got the deep pockets, resources, or whatever, you can actually post a bond that would, you'd have to set aside some money and go through doesn't happen very often, but state of Alaska, for example, is self-insured. You could essentially be self-insured, but you would have to show that, you would be able to handle this without insurance. And in some cases, if you had a large enough business or something, it might actually make sense. Also might make you a target. Part of this stuff, too, I hate to say it, like in liability insurance for a business, that is a huge factor, depending on the business. But, I've talked to many a lawyer, and they have advised me to stay away from certain businesses that I might get into just because of the lawsuits that perhaps would come my way. So, property insurance. Insurance ensures that damages to your auto and home are covered. Also protects personal assets. So, again, you've worked hard to get some wealth together, and the last thing you want is to, somebody come through, which is more than a logical possibility. So, I'm not saying it's at all a good thing, but it does happen. And so the concept of liability, somebody else's damages that you caused, but that causal thing, that's going to be determined by a pretty persuasive, generally a personal injury lawyer, and a jury, perhaps a judge in there too. But I actually, when I was doing a business situation, I talked to some of these lawyers, and they were excited, because I was telling them what I was going to do, and they were like, "Oh man, this is great." Yeah, normally all we do is, I don't know that they refer to themselves as ambulance chasers, but that's kind of what they were doing. They do a lot of personal injury stuff. Absolutely made a killing at it, but absolutely found it boring and soul crushing. They gave me a situation that they had where a lady had hit a moose, and the passenger had gotten hurt pretty badly. Was it the driver's fault? Maybe not. I mean, the moose kind of comes out from nowhere if you've been in those sorts of situations, but the moose doesn't have any assets. It can't be sued. Who can be sued? The driver. So, the lawyers, they work to establish that the driver is at fault, and the court kind of goes along with it because they're like, well, somebody's got to pay for this situation, and our options are limited, so, this is where the insurance takes over. So, it's... Anyway, for me, I was looking at businesses that might involve the sale of alcohol, or even businesses that I've had that I've since shut down that involve people with, off-road vehicles on my property. A real problem. Horses, not so much. Horses, the laws are pretty clear. If it's a dangerous activity. If you get on a horse, whatever happens to you, it's not going to come down generally on the homeowner. Now, if I had, pits with punji sticks, show that I made some nuisance, yeah, that could be a problem. But just for general purposes, somebody getting thrown from a horse, not a lot of recourse. But anyway, there also affects the type of business I've got. I've got a corporation rather than sole proprietorship, but getting a little more in depth there. Anyway, primary protection or function is to protect your wealth. So risk in insurance, they have certain terms they use. Risk is something that it's you do what you can, but you can't avoid it. If you try to avoid risk, to the point where it's negated. For example, I don't need auto insurance because I'm not going to drive. In fact, I'm going to stay inside. I mean, you just can't live life like that. What you try to do is you try to manage risk. You try to mitigate the risk or get it to a low level and then have somebody else accept the risk, like an insurance company. So, anyway, things you can do to reduce risk, but to eliminate risk is not something that's possible in a normal life. So accept risk certain times. If you've got an auto insurance, and we'll talk about this, there's different coverages. And if you say, look, I'm going to go ahead and suck it up, and it's an older car and I'm just going to pay for it if it happens, but I'm going to save a fair amount of money each year by not having insurance for collision, meaning if my vehicle gets damaged, I've got to cover it myself. Yeah, you can do that. Also, there's another aspect where you can get just increase your deductible, which means that the insurance company is not going to have to pay until things, say you have $1,000 deductible. That will lower your insurance rate because you need to pay the first $1,000 worth of damage before the insurance company would even get involved in insuring against risk. All right. Economic impact of the decision. Sure. Yep. So generally with the economy, sometimes people do things they shouldn't do, but the inflation and especially some of the different vehicles. I'm not going to, again, go off on EVs, but sometimes they have unique insurance risks in terms of fire, in terms of other issues, in terms of damage, where some of the costs can get quite expensive. So, unique factors. Types of insurance, property, life insurance, health insurance. We'll talk about life insurance in another segment. We will talk about health insurance tonight. So the insurance company, if you thought you're going to get through life without a lot of math, you're going to find math creeping into pretty much everything. Insurance companies are just obsessed with statistics and data and information, and they're going to calculate, what they have to charge in terms of a premium from you to give coverage. So that's how they work. They do, they need to make a profit, obviously, to stay viable, but they also need to be affordable because they've got competition. So for you as the consumer, you're going to shop around and try and find the best. It's like finding a bag. You're trying to find the best factors that are most important to you, and a lot of it has to do with price. Okay, so different reasons for insurance. You'll notice that flood insurance is not on here. Flood insurance is a unique case. See, all of these hazards events, they're kind of one-off events. They generally happen to a single person or maybe a smaller group. But a flood insurance, that can affect everybody in the whole area, that's in that flood zone, or maybe even outside of the flood zone if it's a big enough event. And what would happen is, the model for the insurance companies, as I said, is to take a bunch of premiums from folks with the understanding that, not everybody's going to have a bad day on the same day. If they did, if everybody crashed their car simultaneously on the same day, those companies would go out of business. Well, that's what kind of happens in a flood event, where everybody on a whole street, a whole neighborhood, is flooded out at a time. So the insurance company, it's not really a viable or even an ethical business model, because they take everybody's money for years and years. When the event happens, they declare bankruptcy and they leave town, and the people wouldn't get the insurance. So flood insurance, when you need it, number one, it's expensive, and number two, it's a federal program. It's not left to private companies. It can't be, because it's not a business model that's sustainable. It's if a flood happens, it's going to be devastating to the company, and it's a false sense of security that they're providing. So flood insurance is sometimes it's administered by a regular insurance company in terms of the policies and stuff, but the actual insurer is the federal government. I've had flood insurance a couple times in different properties, and it can be quite expensive. But FEMA, where I'm currently at right now, they rezoned my property, and they determined it's no longer in a flood zone, which eliminated a few thousand per year of insurance. So it can be a big deal. If you're down in a place like Florida, it can be even a bigger deal, because you're looking at storm-driven floods. Insurance agents, brokers, all this stuff. So different ways this can be done, but it's like everything else, where automation and online sales are kind of the way of the future. Which, when one of the aspects of having an individual agent, those people, they're surviving off commissions, and those commissions are coming from you, so that's reflected in the payments. So not necessarily a bad thing to see some automation coming into that, unless you happen to be employed in that area. So auto insurance, yep. Looking at that specifically, and personal injury, that's the cost of vehicles and guardrail and all that other stuff. Those add up, but they pale in comparison to, serious medical injuries, death, ongoing physical therapy, all the rest of that stuff. That gets incredibly expensive. So you've seen it even in Anchorage and places where the police would rather just have it be a no-fault type situation. We're not going about who killed who. We're just going to kind of get the thing situated and turn over to insurance companies. But if there's injuries or a death, everything's going to grind to a halt, and they're going to do a full investigation of the rest of it. So the policy is a contract. Yes, it is. Specific coverage, and for the individual and the vehicle. So, one thing you definitely you want to kind of know where you stand with your insurance. What should be reported, what shouldn't be reported. One thing that comes up for me now and again is when you're renting a car, do you have coverage through your normal insurance? Most cases you do. So when they're trying to upsell you and get you to take on all this stuff, it helps to know whether you actually have the coverage, and you can decline it, which is financially what you want to do. Redundant insurance is not a helpful thing. My God, those people will fight. I used to have 2 different medical coverages, and the amount of money and everything went late. They're all it's having just a single payer. If you're in a situation where you and your spouse both have insurance, it can be a problem. A lot of times people will if given the option, will decline the insurance with the one employer if they're offering it, and accept it with the other. Because if you get the competing insurance companies, it's you don't get double the coverage, you get half the service, is what I've found. Anyway, so different parts of that liability, so the bodily injury and then the property damage. So the bodily injury can get quite costly, and then the property damage too. You hit some guardrail, take out some street signs. I had a friend who hit one of those bus enclosures. You can be buying a lot of property if you're not careful, in addition to vehicles. The way they quote the policy limits, they give you these series of 3 numbers generally. So, the personal injury is the first part, all the people, all the different injuries, and then the last number, the property damage. So you can see these numbers are pretty low. Even some of you may not know how expensive medical stuff is, but I guarantee you those numbers are low. But even looking at the property damage, 50 grand, a lot of vehicles are 70, 80 grand, whatever, out the door. So it can get pretty pricey, and that's one. You might have taken out a few. So anyway, you need to have a minimum of insurance by law. Is that enforced? Maybe not. But anyway, you're not standing good. Medical coverage. Yep. To the insured car. Yep. So different states have different levels. In Alaska, 50 per person, 100 total, and $25,000 for the vehicle. That is not a lot. So most of the numbers, when you go to get a quote, they'll be typically higher than that. Especially you saw some of those with 10,000. Uninsured, underinsured, yes. In case somebody went with low limits or doesn't have insurance at all. You would think that the police would follow up, and anyway, I've had a couple of situations where that is not the case. So collision is this business about your own vehicle. Now if somebody else hits you, and you don't have collision, that doesn't affect you. If they're the cause of the accident, it's their insurance company paying for it. But for collision to kick in, collision means you were causal, and it's your vehicle. And if you don't have it, then you're sucking it up. But I've gone without collision and wrecked a car, slid in the snow, all that kind of stuff, and totaled it out. And it was a painful. It was an old 4Runner, only worth about, $4 grand maybe. And it was a gamble I took. I probably saved maybe $500 a year, and maybe not a great gamble. Whatever. You have to make those sort of decisions. When as I mentioned, I could not, affordably get insurance for my Dodge Viper, which was a very expensive car. That would have left a mark had I crashed that thing, but I never did, and so that's all good. But anyway, and then comprehensive. Comprehensive is the stuff, floods, threat, hail, the rest of that. Also to include windshields, things like that. Now keep in mind, if you file a bunch of claims under comprehensive, unfortunately they may raise your rates. So that's not perfect. Let's look at the next one. The deductible, again, something you have adjustments over. You can switch that out. You can, raise it up. Another story, it was a Corvette, so a semi-high dollar car, and it had $1,000 deductible. And this was actually, I wasn't in that, but I was in a different vehicle. I was flying jets in Europe, and I was back in the States with a rental car. Crashed this rental car, and it was my fault. And but they used my existing auto policy, and I had $1,000 deductible. This was a unique thing that, whatever. The lady said, "Did you really want to have $1,000 deductible?" I'm like, "Well, not now." She says, "Well, why don't I just fix that for you?" Anyway, I didn't report her or anything, and she definitely saved me some money. So you can't count on things like that. But yeah, that would have been a painful situation. Other provisions for additional premiums. Yeah, all kinds of additional insurance you may want to consider. Something that's realistic, especially up here if you're an outdoors person, sometimes some of the insurance to rescue you is quite useful. I was in a Piper Cub a couple of years ago. We crashed, and me and my buddy, we were fine. Everything was good, but man, if we would have called the life flight to come get us, that could be a pretty expensive bill. And we were all prepared to hike out. We weren't worried about it at all. But the Air Guard came and picked us up, which was cool. But that is definitely a decision. If you are in that sort of situation and, God forbid you're injured and you have to call and get that done, get rescued, yeah, if you ordered it, you're paying. And I did have one friend who had that. It was about a $27,000 bill. So something to keep in mind. Other things, yeah, claims, lawyer fees, the rest of it. Anyway, this is a personal finance topic, but again, you're in damage control. You're just trying to, protect your assets, be a responsible citizen, but not inflict any further damage on your financial situation, because insurance can get quite expensive. Summary of the provisions. Yep. So bodily injury, collision, medical, comprehensive is just what it sounds like, everything else. What's going to affect it? How much the car is worth. Some vehicles are very hard to repair, but it's insane how expensive things can go. Your age, your mileage, driving record, they don't have whatever gender, sex on here, but dudes generally have to pay a little bit more. And it's none of this stuff is, they're not personally after any specific group. In fact, if you get to be super old, your insurance rates start to go up again because they find that you're involved in more accidents. These guys are all about numbers, and the insurance companies are all statisticians, and they do calculations, and they figure out what causes wrecks. And young people, somebody who's had a few DUIs is probably going to have another one, and if that's on your driving record, yeah, it's going to be painful. Your location, driver's training, you always go that route. Oh yeah, I've had the training. In fact, I'll take more training if you can make this ticket go away. School performance, I guess they found a correlation on that. I don't know that they ask that anymore, but I'm not necessarily college age anymore, so maybe they just quit asking it. You can shop online, much easier. And yeah, I used to have a local insurance agency. I hated them. Oh my God, they were taking pictures of my house, asking me about, what my timeline was on projects, when I was going to fix my roof, whatever. They were in my chili the entire time. I'd much rather have a company in Texas who is not. I don't need a personal relationship. I got enough of those with other folks. I don't need to know my insurance people. Hope we never meet. I just send them the money and they go away. Anyway, each to his own. Comparison of different states. So some it's based upon driving, some it's based upon hazards, some it's based upon lawyers. The different states are, different prices. That's old data though. Homeowners insurance, kind of the same thing. Obviously a little bit more affordable. It seems like you're insuring much larger asset, but you're not expecting as much to happen. Personal liability still happens. If you've got more wealth or you've got a business, you might want to consider a secondary I've got what you call an umbrella policy, just a large liability policy that it's fairly affordable. They're going to want to know what your business is and some of those parameters, but you can get $1 million worth of liability coverage for not a tremendous amount of money. So, but all sorts of things will factor into this as well. How far away are you from a fire station? Is there are there fire hydrants in your neighborhood? Are there are you in some place where the brush is out of control in terms of wildfire? What's your roof material like? Do you have a wood stove? What's your heating system? What's it going to cost to reconstruct this home if it's burnt to the ground? All sorts of different things that factor into homeowners insurance and different things they cover. When you're looking at some of these things on here where they're talking about, well, here they're using H's and homeowners, but in insurance terminology they use, hazards are kind of the term. Whether a hazard would be what's going to cause this thing: fire, flood, earthquake. Those things are hazards. And what you want is all hazards. You want earthquake insurance if you can get it. Now that's one of the things. Can you get it? That's a tough call. Thankfully, I didn't have any earthquake insurance to any of the structures I owned up here, but I know a lot of people who kind of took a beating on that or thought they had coverage that they didn't have. So earthquake is a unique case, and you may find that you may be rolling the bones on that one, that you would not have coverage. So you have to check on that. Property damage. This can be a real wake-up call. If you've got, let's say you run pay the lowest fee possible for homeowners insurance, and you opt for cash value, and you opt for a few lesser perks in terms of your house burns to the ground. Do they pay for the hotel while your house is being reconstructed? Some of those things, there are some differences amongst companies, and it makes a big difference if this actually happens. Let's say you have a big screen TV that you spent, I don't know, maybe a couple grand for. I mean, I never do that, but perhaps you did. And they come in and they're like, yep, that thing got destroyed. Here's your $300 or $200 or whatever it is. You're like, wait a minute. To replace that, it's going to cost, I want to replace it with another one just like it. Well, in their mind, they're just giving you replacement value. The technology is a little bit dated now. It's used, whatever. And your clothes, let's say you had a fire, and the pretty small fire, but just the same, created a lot of smoke damage, some water damage, and all of your clothes are, unsuitable to be worn. Well, you don't want to know how little they think of your wardrobe. They're not going to, let you go out and buy brand new. No, they're going to be giving you thrift store pricing on your own stuff. So if you can afford it, you want to get the replacement cost. But again, you've got to, do what's affordable for you. So the structure will generally get reconstructed. The other thing too, that the insurance companies are not always your friend. And I, a couple times, have been tried to be scammed by a couple different insurance companies. They'll call me up, when I get a new home, and they'll say, hey, your home's worth, let's say, $400,000, and it shows that you only have, $300,000 worth of insurance. You're underinsured. No. The house might be worth $400,000, but the property's worth something. The dirt is not going to burn up. There's still some value there. What I want to know is what it's going to cost to put the structure back up and the contents, repay that, and go figure, that's, around $300,000, so I'm good. But they will, try to take advantage when they can. Other structures on the property. Yep. I've got a very unusual situation. I've got a couple outbuildings that I specifically, because I knew they would not be inspected and I didn't want to insure them, and so I split them off into a different parcel. And when they look at a satellite view, they're like, wait a minute, we're not insuring those other structures. And yeah, I never asked you to insure those other structures. In fact, I don't want you to insure those. So you get, again, this was the same insurance company kind of second guessing me on everything, that I specifically wanted to do. Personal property covered up to a specified amount. This gets into a situation where it may be called a personal property floater or some sort of addendum to the normal insurance policy, a rider, or anyway, something outside of the contract in the case that you've got a valuable collection of something that's in one particular area. Let's say, for example, you've got an antique gun collection, or you've got a bunch of photography equipment, some high dollar stuff, or high dollar whatever, audio stuff, or jewelry or something. And you think, wow, I've got, 15 grand in just that one type of equipment. I'm glad I've got insurance for it under my homeowner policy. Well, you may find if you read the policy that it'll go through perhaps by category and say, recovery of jewelry up to $1,000 or something. They're not going to insure, huge museum quality pieces under our normal homeowner's policy. So you want to fess up to whoever's you're getting your homeowner's insurance with and say, look, I may need additional coverage, or I want to ensure this is covered, and identify those items and make sure you have the coverage that you think you do. And then the home inventory, again, a record of kind of what you have, and the easiest way to do this would just be with photos or a video or something that's going to be stored or kept someplace separate where it won't get burned up in the fire. Placement costs, we talked about that. Personal property floater. So here they're calling it a floater. Sometimes you see it an addendum. Sometimes you hear it called a rider. All the same thing. Just an additional document that amends the insurance contract. Liability can be a factor. Swimming pools aren't necessarily a thing up here. But if you did have one and you didn't have a fence around it, you have a liability from having that swimming pool, but you are going to be found negligible if you don't have a fence around it. And the same thing's true with, things hidden under the snow. If you've got some ditch you dug and it's on a walkway and somebody's out doing work on your home, you can get sued. So you've got to make sure that you take proper care. So if somebody comes on your property and gets injured, you're probably going to be found liable. If it's, due to you being reckless, careless, negligent is the legal term they'll use, you're going to be paying, in addition for that, for the consequence of your actions or lack of actions. So we talked about, putting you up in a hotel, additional living, loss of provisions, you're going to have a need restaurants. Things are going to be very expensive. God forbid that happens. So things that will affect it. Deductions, location, or deductible you set. If you've got a brick house in a neighborhood with, no wildfires, next to a fire station, it's a different situation than somebody out in the sticks with a lot of hazards. And again, different states. Now you see other factors kind of creep in here. Oklahoma, Tornado Alley kind of thing. Alaska probably doesn't have the numbers even right in their charts. Who knows where we actually sit. Strategies to lower that premium. So, of course, you definitely want to, when they ask the question, do you have smoke alarms in every room? Do you have, CO detectors? Do you have this? Do you have that? If you got a wood stove that you're not using, you might want to take it out or whatever. And don't advertise it if they don't ask about it. Sometimes you can get a discount if you have all of your insurance, your auto, your home with the same company. Sometimes not, but shop around. Renter's insurance, you'll see a lot of landlords requiring this now because it provides another layer of liability protection for them. But it's pretty affordable. So I used to have it when I was a renter, and at the time it was certainly less than $100. So, but it doesn't do anything for the structure. It's just for your provisions, your stuff, your liability. Whoops. An umbrella. Yeah, I mentioned before. I've had this happen before where, whatever, something bad happens, and who's gonna cover it? They're probably gonna find I was at fault, but are they gonna say it was due to my business, my home? Was it an auto thing? Was there whatever? You just want that umbrella liability insurance, that if you get to that situation where you're being sued for $1 million, you've got some sort of coverage to increase those limits. Okay, health and disability insurance. Like I say, pretty controversial topic and not very well covered by programs. The reason why I say it's controversial is because a lot of times insurance it's not the same as homeowners insurance, or it's not the same as auto insurance. People they're people, they're not things. So it's a different thing. When you talk about, for example, if you're talking about a vehicle and you said, oh, my vehicle has a pre-existing condition, well, that means it's already wrecked. I'm not trying to doom everybody with some sort of pre-existing condition, but you can't go to the homeowners insurance people and say, yeah, I need to get insurance for my house. And they'll say, well, where's the house located? Well, this is where it used to be. It's burned down now, but I still need to get insurance. And that's kind of how they look at people that, when you're trying to provide 100% health care coverage through a commercial setup, or even through what they call the Affordable Care Act, the Obamacare thing, and you're going to insure everybody with some part of that group, it doesn't already having extensive situations, it doesn't work. So you have to recognize that for what it is, and not call it insurance. Call it whatever. I don't mean to be pejorative, but it's essentially a welfare type thing. It's something that's going to be subsidized. It's not a question of, am I going to wreck the car? It's a question of, the car's got some damage, but we need to keep it going. This is not a car that we can, we don't put people in junkyards. We keep them going. So we got to work here, and yeah, this is going to be a money-losing situation for everybody involved. The good news about healthcare in the U.S., if there is any good news, is that most people still get it from their employer. So Medicare, again, that's more of a for older people, age 65. Medicaid, more of a welfare kind of program. Medicaid, this is down with families, so children under the CHIP program. Affordable Care Act, so they've called that Obamacare, Affordable Care Act. Only 2.9%, so pretty small numbers. And then other can be, well, it's undefined, but the thing about it, they'll say, oh, this is horrible, almost 10% of the people are uninsured. I'm not saying that a fair number of people don't have insurance, but there is some percentage that don't want insurance. Again, people that are in the 1%, for example, in terms of upper income, may not have insurance and may want to self-pay because if they're not getting it from their employer, and you're a cash purchaser, you can get health care for a much more reasonable price. The prices you see that are charged by the doctors they're just anticipating that they're not going to get that full amount, so they set the price quite high, knowing that Medicare or VA or whoever is only going to pay a portion of that. Even the commercial insurers are only going to pay a portion of that bill, and so fine, we can play that game too. They just jack up the bill so that portion equates to what the bill is. But if you walk in there and say, I'm going to be paying cash for this procedure, it's a whole different level of payments. So private insurance companies, government, critical component of financial planning. Yeah, but how can you... Planning for this is quite difficult. If it happens, it's generally going to be catastrophic to the point where you're going to be in some sort of bankruptcy situation if it's bad enough. I mean, that is the cause of most bankruptcies out there, are some sort of medical situation. But to financially plan to have some sort of health savings account, which you can get, but it's not in most cases going to be enough, or it's going to be too much. It's going to be an either or situation. So very tough, but very useful in elections. So it's not something that you're going to see a solution to, because both political parties can advertise and make the case why it should or should not happen. So 1 in 5 workers, they say, is uninsured. How much to cover it? Many options available. So the Affordable Care Act that's kind of a misnomer. A lot of people find that not very affordable. A lot of people in that situation will find that this may be something that, unlike income tax brackets, in order to qualify or not qualify for, let's say, a Medicaid, you may hit a certain income level. Certain people may try to keep their income specifically below a level so that they can still qualify for, government health care. If they work into the Affordable Care Act thing, it gets quite expensive. I still cannot get rid of this cough. Going on multiple weeks. Speaking of healthcare. So anyway, location, pre-existing conditions, renewability options. A lot of these things are not addressed by the current situations. Pregnancy, dental insurance, vision insurance. Both dental and vision are actually semi-affordable. You can get external coverage for those. And because it's a pretty open marketplace, a lot of competition, a lot of times they're very affordable. If you had to pay for, say, some of the laser eye surgery, if that was done without, like the rest of healthcare, the price of those operations, the complexity, the equipment, those prices would be astronomical. But because they're not generally covered by insurance, they've taken more of a market-driven approach. They're actually fairly affordable. Unreimbursed medical expenses. So the deductible, obviously the part you got to pay, the co-insurance, coverage limits, and benefits. So anyway, there's just too many variables, and there's not really much of a of a federal program that covers these items. Like I say, the Affordable Care Act it's not a popular option. It wasn't meant to be a popular option. It's meant to be fairly polarizing and drive towards a private insurance system or a single payer / government system. But nobody is really going to improve this hybrid situation because it doesn't have a champion. There is neither political party is going to rally behind the current system because neither one of them want the current system. They have their own political equities that are somewhat different. So that's going to be a problem. Yeah, an FSA, flexible spending account, medical savings account. There are some stopgap type things, but if you get in a catastrophic situation, but again, if you're a young person, some of these programs that are now illegal used to be able to get a policy for, let's say I'm 30 years old and I get life-threatening cancer. I don't have the insurance for it. Well, you used to be able to get an insurance policy for some of those catastrophic diseases because when you're young, when you're in your 30s, those things generally don't happen. So you could do that in a commercial insurance sector and be fairly affordable. But now when they say, oh, any policy to be considered an insurance policy to be legal needs to include all these other things that are not catastrophic. Anyway, it's a lot more complex, much more than we can talk about here. But the current system is not there. So Medicare, people over 65. These people vote. They've been out there. They're, they get semi-reasonable care, but because they're older, they also need it. Medigap, you'll see some of these certain things to cover little gaps in the policy, but it's more refinement. But again, private policies to supplement. Prescription Act, they added that years ago. Medicaid. So again, disabled, needy families with dependent children. So, but again, this is a welfare thing done by the states, administered by the states with generally federal funds. And then the Affordable Care Act since 2010. But like I say, it's not the solution. It's a sort of a stopgap hybrid that is not ever going to be a long-term solution. Long-term care insurance. So this means going to a rest home. You can get insurance for this. Generally what happens is most people don't have this, and they get to these sort of end-of-life situations, and they're put in a nursing home, and generally if they had any assets, the assets are all used up, and then it's turned over to the federal government to continue to pay, or the family, or what have you. Not a great situation. There are insurance policies you can get for it. One of the things that kind of became more aware, or most people became more aware during COVID, if you remember COVID, there were lost a lot of people in a lot of these nursing homes, but most people weren't aware of the fact that if you're unfortunate enough to end up in a nursing home, 50% of the people who go in a nursing home within 6 months are no longer with us. So it's you're going to lose a lot of people in a nursing home from the get-go. It's almost not hospice, but it's your prognosis is typically not very good, but there are ways to insure against it. The costs, types of services. I've never had this type of coverage. If I was in one of these type of situations later in life, I would. It certainly wouldn't happen in Alaska. If I'm going to be inside, I'm not going to be in this state for the most part. In fact, I'm probably not going to be in this nation. I could go overseas and sit on a beach somewhere, and that'll be that. But everybody, each to his own. Long-term insurance, other things, provisions, policy. If you wait till you're near that situation, yeah, the insurance is going to be unattainable or so expensive. If you've got health condition that makes you look like you're already destined to go there, yeah, they're gonna pick up on that. It's gonna be quite expensive. But the premiums and the policies are out there if you're interested. Just depends whether that's something you wanna think about. Most people are not quite to the point where they even prioritize this. Disability insurance. A lot of times this is done by the employer. There are other funds that take care of this. Social Security, for example, one of the reasons why it is going bankrupt is because there are a lot of people who are disabled in one form or another that draw money from Social Security. If you do have private insurance, they will make some sort of determination. Let's say you're a roofer, and you fall off the roof, and you're going to be in a wheelchair. Well, yeah, if you had the own occupation, you would get your full benefits then, because you're not going to be going back up on a roof. But if you could learn to code or do something else where you're going to be in an office setting, they might say, yeah, you're still employable, we're not paying. So read the fine print. Sources of disability insurance. So again, the private stuff, the employer, which is most of the case. So again, if you're ever hurt on the job, this is where they really want to keep track of this. If you've noticed the mandatory postings on the employee boards and things like that, because it certainly makes a difference if there's an injury. And then Social Security. Workman's Comp, another state fund. So again, you can get private policies if you so desire. There was a disability insurance policy offered by a company I worked for, and I was going to be, due to an operation, I was going to be temporarily disabled. And what I found was, I essentially had zero coverage. I mean, not that I hadn't been paying for it. I did have it offered by the employer, but when I did the research and called the company, I found that, nobody's got a dime out of this company. They were the worst rated company. Anyway, I wasn't really evaluating, the strength of the company and me staying on with this corporation, but it was just another sort of nail in the coffin why I decided I no longer wanted to be employed by that company, because they had scrimped on everything to include who their disability insurance provider was. They still claimed to be offering disability insurance, but within a 2-minute search on Google, it was quickly apparent, and then a few phone calls, and they weren't going to pay a dime. You were on your own, and I was just glad that I wasn't going to be reliant on them for more than a month or two. Okay, so my apologies about the medical stuff, because I just don't see a lot of value in that section, other than just kind of highlighting you to the fact that you should be nervous. I don't know. I mean, you should perhaps pick your party. I mean, if one party was strong enough to get through a policy, that would be a positive. But what you've got right now is you've got this solution that's not a solution, intentionally so. It's meant to be a campaign slogan from which to both of them can point to it and say, this is why we need our party to be elected in order to fix it. And obviously one party wants to go with a government option, and the other party wants to go with a private option, and nobody wants this hybrid option in the middle. And they aren't going to work to fix it, because that would be, 4 years from now, what would they argue about? So, again, enough cynicism on the politics, but some of these situations they're going to affect your personal finance situation, but they're political, not personal finance situations. But the test, so you all do well. It's going to be on Blackboard, no Proctor, RP Now. It'll be up for a week. Once you clock in and you've turned in your homework, you're going to do that, and you're going to watch the review video before you do it. Obviously, if you need to use a calculator, go ahead. It's not going to be open book, but it's done at your home. But if you tried to look things up, yeah, you're going to not make it in the time limit. There's enough questions there where you won't be able to figure that one out. So anyway, that kind of takes care of itself. And we'll have more on that next week. If my throat wasn't all scratchy, I'd talk about the term project. But yeah, it's time to start thinking about what's going to go in your term project. You can look at the outline that's in the syllabus, and when we start talking about investing, and we start going on some of these sites, some of these investment sites, Fidelity, Vanguard, T. Rowe Price, whatever, you'll start seeing the resources you can probably utilize to help you with that term paper. But it builds on stuff throughout the class. But it doesn't hurt to get a start on it now. So anyway, I'll put this out there, and then sometime this week I'll put out the exam prep video, and then the following week you'll have that week, and there'll be an announcement to that effect. All right.